Welcome to the Tesla Economist. Please hit the thumbs up and remember to subscribe. You can follow me on Twitter and talk to me on Patreon. I've already touched on the price rises briefly in a past video, but I think it was actually a big enough deal that it was worthy of its own video. Now, although the prices are being risen in the name of inflation, well, we will get to the numbers, but I think it's pretty obvious that there is clearly going to be additional profit from these new vehicles. Firstly, we'll just discuss the price rises and what they mean, but then we'll go into just how incredibly clever and strategic these prices are. More 3D chess moves explained. Now, Tesla have raised the prices of their cars in the US by a reasonable amount again. It would seem that no LFP vehicles have had their prices raised, and it's just the vehicles with 2170 and 18650 cells, except for the Plaid versions, which perhaps have already had their prices raised quite a bit for plenty enough margin, and are already closer to the market clearing price now. Out of all the price rises, the one that seemed to make people take notice the most was the Model Y price rise of $3,000 for the long range. But I'd also like to point out that the Model 3 long range also just increased $2,500, which is significant too. The other rises were huge, but they're on the more expensive S and X anyway. Alright, so back to the Model Y. A car that was under $50,000 last year is now $66,000. Just to be absolutely clear, that is a $16,000 increase in price, or 32% increase. That increase is also 24% of the new existing price, which would mean that if the cost of production is the same as it was last year, then there is an additional 24% in gross margin for the long-range Model Y. If before it was getting around 26% margin, it is now at 50% margin. The cost of production may have increased, but it may have also decreased. Either way, it's not increased close to the price rises. In other words, there's going to be more profit coming from these vehicles since the price rises. Tesla should certainly see some cost reduction in Austin though, at least within time, when 46As are ramped up further. In fact, the Austin Y could also end up seeing a price rise when it is officially launched, perhaps to about $62,000. But who knows? It feels like Tesla's costs are coming down whilst their prices are increasing, and Tesla finds ways of offering more value to customers too, like FSD and insurance. And that's another thing, the long-range Model Y now has a serious competitor. In fact, you might have thought it would even potentially be somewhat cannibalized by this new Model Y Austin, an improved Model Y with better handling and safety, literally the latest technology when it comes to EVs, the most advanced automobile for sale today on the planet. But no, what happens when Tesla attempt to cannibalize or even somewhat Osborne the previous Model Y? Tesla raised the prices. Demand is just that good. I think this further price rise also separates the Model Y long range from the Austin version more, with a further apart price. Previously, the prices were too close. Could be confusing to consumers perhaps. It might also mean that the Austin Model Y may likely only have the range Tesla is saying, and it's not software locked, as it would be too competitive to the long range. But then that makes you wonder what will happen when the energy density of the 4680 cells improves so much that the range of the Austin vehicle approaches the long range. Anyway, not sure and not really my problem, but Tesla will need to find consistency in models, variants, cell and battery packs. The important thing to realise is that the world wants a lot of Model Ys, and still there are plenty of people saying that Tesla is cutting a lot of people out of the market by raising their prices. Sure, they have. But so did Ferrari. Why aren't you cross at Ferrari? They make even larger gross margins than Tesla, yet people aren't on Twitter complaining to the CEO that they can't afford a Ferrari. I'm not meaning to sound flippant or facetious, but in Tesla's mission, it doesn't say a Model Y for everyone. Tesla will increase prices to make more profits. These additional profits will go into development of the more affordable products for the masses. And alright, perhaps the long-range Model Y has now been priced out of the market for a lot of people, but there is now the lower cost Austin Model Y available, and likely an even lower cost rear-wheel drive version later on. Consumers simply see so much value in a Tesla, they're willing to pay more, and where I live, they cost even more than in the US, yet I still bought one and consider it exceptional value for money. We hear regularly about these US price updates, and we immediately jump to the conclusion it must be a good sign. It means we have enough demand, as we still have this big backorder to get through. We know we have the margins, we aren't raising prices for survival, but we rarely see the same effect in China, as if the price there is closer to supply meeting demand. Except, this time, we're also hearing reports of Tesla raising their prices in China now too. Tesla increased the long-range version price by 5%. Now this was just the long range, so Tesla didn't increase the price of any of the LFP vehicles. This might mean that the cost of the nickel cells have increased more and need to compensate for the additional prices compared to LFP. Alternatively, it could mean that demand for longer range vehicles has increased and can thus raise the prices higher as the market does seem willing to add a premium onto longer range vehicles now. Either way, the fact that Tesla are raising prices in China too looks good for global demand. If Tesla were at 35% margin previously with the Model Y long range, which I think it would be at least given all the other price rises, then when the Model Y was $63,000, that would have been a $41,000 cost of goods sold per vehicle. The price has now increased an additional $3,000. This would increase the profit margins further again. This additional profit also goes straight into operating income and is felt even more in net profits. If the cost remains constant, then that is a price increase of 7.3% relative to the cost. Now, do you think inflation will have added 7.3% to Tesla's costs in 9 months or so? This is certainly going to add to Tesla's profits. Perhaps this is to do with the 2170 sales. They now have a higher opportunity cost, where they can be used to produce vehicles cheaper and sold at a higher cost, i.e. more profit per 2170 cell. And as we are cell limited, it is partly about where to allocate each cell to get the highest profit. It would seem it's all 2170 versions of the vehicle they're getting the price rise, aside from the S and X long range, which may just be proving to be very popular. I've said before that the supply and demand curve is broken with Tesla, and this is not an exception. In a recession, most businesses might think to lower their prices in order to increase demand, which has likely dropped. But no, not Tesla. Of course, Tesla can do the opposite. They can raise prices to increase demand. Okay, now the genius of what this move was. Tesla already has enough Model Y orders in the US until March next year, and this was just for the long range. Now, a recession will tend to last about 18 months. Tesla has enough orders now to last over half of that period. And by the time they're all delivered, well, we would have expected some new orders in too. But we have the recession. Consumers are less confident to suddenly spend $60,000 or so on a new electric car. Instead, they cancel their Tesla order. This would be something that Tesla wants to avoid. But now, would you want to cancel an order for what is a $66,000 Model Y when you only have to pay $55,000? Because although the recent price rise is only $3,000, Tesla have been raising prices all year, and a lot of customers only have to pay $53,000 to $55,000 for their Model Y. They instantly get a car that would cost $11,000 more if they ordered it today. Well, actually $11,000 more and a 1-year wait. Your $55,000 Model Y could possibly be resold for perhaps closer to $70,000. Now, are you going to cancel that order, or are you going to accept a massively discounted car and cut back on expenses elsewhere? Or even if you can't afford it, you may just want to resell it at a profit. Whatever the case, I think the chances of anyone cancelling their orders now has just reduced significantly. Now, to me, that is an absolutely incredible move, and just an example of some of the pricing power that Tesla has in the market. Tesla can fluctuate their prices 10% either way and still have plenty of demand and profit. And this is in the auto industry absolutely unheard of. This just means Tesla are going to be even stronger during a recession. On top of that, it adds concern to consumers that Tesla might raise the price again. Along with the price of oil rising significantly, it might make people want to get in and lock a price now before it goes up to something even more ridiculous, and waiting lists grow even longer. Everyone wants an electric car, and to be sovereign from oil prices, Tesla could end up starting some serious consumer FOMO. By the time the recession is over, inflation would have been felt more uniformly across the economy, as the invisible hand does its job, meaning that by the time the deliveries for these newly priced Model Ys are happening, that prices and wages should have caught up accordingly, or at least better adjusted, thus resulting in Tesla able to maintain these higher prices, with demand back where it should be. Anyway, these prices are a big enough story on their own for shareholders. It'll be a while until the prices are realised in the financials, but we know they're coming. I just thought this was incredibly clever and is likely to lock in all these orders over the potentially more tumultuous times we might see in the economy. Thanks for listening. Please hit the thumbs up and subscribe. You can follow me on Twitter and talk to me on Patreon.